Here are some of the things that you can do before the year runs out. So please don't wait until January. Do these things before December 31st. My name is Stanley, a former finance analyst. I share tips on how to build wealth as a new immigrant living in Canada. I also share my portfolio publicly to provide more context to those who are in doubt and help people who are also immigrants and look like me and show them the possibility of building wealth by investing in the stock market. So in this video, I want to share some important money tips to help you lower your taxes and save money before the year ends. If you wait until January, then this won't mean much, but this will still be good information for the coming years. So stick around and watch till the end. The first thing you want to do is open a first home savings account, the FHSA. This account is basically just a gift that anyone trying to save money for their first home or anyone hoping to buy a home at some point in the future, this is an account that you want to take advantage of. It combines the advantages of a TFSA, which is tax-free withdrawals in your TFSA. Any money you make in your TFSA account is free. You can withdraw tax-free. And the RRSP, which is tax-deductible contributions. When you contribute to your RRSP, you can use that amount to lower your tax bill. So if you contribute money in your FHSA, you are allowed to use it to lower your tax bill. And when you withdraw money to buy your first home, you can also do that tax-free. So this is more or less a win-win situation and you cannot lose with this account. Here is what I think everyone should know about this account. You have to open your FHSA account by December 31st. Even if you do not plan to put any money inside it, open your account by December 31st. This is because your contribution room only starts building once you open this account. Let's say you open your account on or before December 31st this year. You will get a room of $8,000 for contribution and another $8,000 by January 1st of 2025. Even if you are not planning on buying a home ever or anytime soon, 15 years is a long time. You have 15 years or until you turn 71, whichever comes first. This is the amount of time you have to contribute and make use of this money. So for most people, there is an advantage to using this type of account. The least you can do is set it up and not use it. You have that contribution room there. You can use it whenever you want. Fact is, who knows? Maybe in the future, you will be grateful that you actually opened this account. One important rule, however, is with the FHSA, only $8,000 of unused room can be rolled forward each year. So unlike the tax-free savings account where you can let your room pile up like your dirty clothes, you can do it with the FHSA. For example, I opened my account last year in 2023. Say, for example, I had not contributed a dime. By next year, 2025, I will have accumulated $24,000 of contribution room. I, however, can only carry forward $8,000 and contribute the following year's $8,000 as well. So that is a total contribution of $16,000. So you can only contribute $16,000 maximum in a single year. So it doesn't matter how much room you accumulate, $16,000 is the maximum you can contribute in a single year. So keep that in mind. The next account you might want to take advantage of is the Registered Education Savings Plan, the RESP. If you do have kids, then you need to know about the RESP. It is a tax sheltered account for your child's education, and the government is practically giving you free money. College education or higher education is not cheap in Canada, so you have to take advantage of this account. So here's the deal with the RESP. Put $2,500 into an RESP for each child every year, and the government will throw in an additional 20% bonus, up to $500 per child in a single year. You do not have to put up to $2,500. Whatever you put in, you get 20% of that amount added for free. $2,500 is just the amount that allows you to get the maximum benefit of the RESP per year. It is basically free cash. That's like the government saying, take some extra money to help pay for your kids' college tuition, or take some extra money and pay for textbooks, and it is free. It is a grant, so you don't have to pay it back. So if you've missed out for about a year or two of contribution, you can actually double down on your contribution up to $5,000 and get up to $1,000 in grants in a single year. Just try and make sure this does not become a habit. Just stay consistent with your $2,500 contribution every year, and you will be able to maximize the lifetime grant limit of $7,200 per child, and this is an amount that you can allow to grow for every child until they are ready to go to college or university. Here's a tip: get this done by December 31st, or you will miss out on this year's free money. So another account that I am a fan of is the tax-free savings account, the TFSA. You see, the TFSA account is like the Okapatapata of all tax sheltered accounts. This one does not have deadlines. You can carry forward unused contribution room indefinitely. So whether you contribute in December or January, it does not really matter. However, something that is worthy of note that I think is important to highlight is when you want to take money out of this account. If you need to withdraw cash from your TFSA account, do it before December 31st. And here is why. When you pull money out of your TFSA account, you don't get back that contribution room until the following year, even if you come up with the amount that you have withdrawn in, say, a month later. So if you withdraw in December, you have to wait, say, only a few weeks, because by January 1st, you get back that contribution room. So the wait time is very short. However, if you withdraw in January, you're stuck for the entire year until January of the following year. So the wait time is a lot longer. So if you withdraw in January and you come up with that cash again in February, you cannot contribute that money back. Watch this video for a step-by-step process on how to open a TFSA account and start your investment journey and grow your money if you live in Canada. The next and final account that I will be talking about is the Registered Retirement Savings Plan, the RRSP. The RRSP basically works on a different schedule because contributions made in the first 60 days of the new year still counts towards the previous tax year. So this one does not really follow the regular calendar year. That means you have until March 3rd of 2025 to lower your 2024 tax bill. This extra time can come in handy for helping you crunch the numbers and make better plans with your contributions. If you're expecting to be in a higher tax bracket next year, you can even carry forward the deductions for a bigger refund, and it is beneficial mostly for people who earn a substantial amount. Don't wait until the last minute. So if any of these accounts is something you would like to take advantage of, pay attention to the deadlines. Don't be that person scrambling on December 31st trying to make it all work. Transactions take time to process, so plan ahead. If you need a brokerage to invest in your TFSA or RRSP, I highly recommend platforms like Wealthsimple or Questrade. Momo is another brokerage that is new in Canada. I have read little about them, but I am definitely checking them out for my 2025 investing. One thing I think is going to be for sure with Momo, competition is good for the consumers, and in one way, shape, or form, they will be offering low fees, which might edge out Wealthsimple and Questrade a little bit. So now that they are new, they are throwing away bonuses like Don Jazzy, giving away cars and cash gifts. So if you deposit $5,000, you can get $300, or you transfer $10,000 and you get $500. It's free money. So my people, don't miss out. Take advantage of these new platforms as well. Take advantage of the new apps, check them out and see if it is something that you are comfortable using. Most of them are user-friendly platforms, so I see no reason why you shouldn't check them out. And finally, if you are looking for even more ways to save and grow your money, subscribe to the channel. I share tips on what I'm doing to grow wealth and build my investment portfolio. I also share my investment portfolio publicly. So subscribe to the channel and I will see you in the next video.